Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, January the 9th. The year's 2022. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. So we'll go right to the weekly charts. We can see we gap down, but the gap is filled. In fact, I was watching it and the spread was about 30 pips. It wasn't even tradable. It was just ridiculous. But as we can see, we've got one, two pairs where I believe the spreads have narrowed, so there's still possibility. And in fact, the Euro USD and the dollar Swiss franc, they're both major pairs. So it looks like they might be good trades to look at. And we're 20 pips above the open at the moment, 7 off the high and 20 above the low. So you can see that we really didn't drop much below that open. Looking at the monthly, we can see 64 pips above the yearly monthly open, 20 pips above the weekly daily open at the moment. As far as inside bar action goes, and we just hit a low touch. Looks like there's definitely a few pairs that have some inside bar action. Wow, the Euro Swiss franc 22 days ago we had an inside bar. We've got action in here on the Swiss franc, the US dollar Swiss franc 20 weeks ago, inside bar action. And let's see, the Euro New Zealand dollar 9 months ago, there was inside bar action to be had. So for your inside bar traders, that's something to take a look at. Okay, we are 4 hours into the trading day and no pairs of 100 pip range or more. And as I said right here, the spread was just ridiculous. It was something like 60 something, or I think it was, yeah, right around, I was looking at a different broker, but it was like 60 and 90 something. It was just crazy. But I think when you learn how to read those spreads, you can see which way the market's going to go. And it's obviously they came up to the 90 level. And so, but it looks like now they might want to return it back towards the open. Just have to wait and see. Range is too low for rat trades at the moment. As far as the pivot plans, near R1 short, near the pivot point short. So where we are here, obviously, the pivot trading plan is calling for a short. It says daily open below pivot point. Okay. So it's not calling for a long until the 35.48 level. But we need to fill that weekly pivot down here at 135.41. So let's take a look here. The pivot charts. Monthly, we've missed it by 19 pips. Weekly, we took out last week's pivot, but 2 weeks ago, that pivot's still open, that weekly pivot. And we're 50 pips above the current weekly pivot. As far as the daily, we've already taken that out. Okay, the upper wick zone. As you can see, there's not much of one. Already popped through it once. And now we're heading back out of it the other way. So if you look at that daily candle, you can see between here and here, it's just mostly body in that daily, not much of a wick zone. Oh, and I did do an update to this indicator, so you can now see the labels here and with the distance in pips from those levels. I'm going through some old indicators and just popping in that new code because it's not really that difficult to do, and it's just handy to have. Okay, we're looking at the range 27 pips, of course 0 percentile, so that range has to expand. Now, when you think about the ranges expanding, you can look and see what the average is. You can see over the past 4 weeks the bigger ranges versus the smaller. So we had 2 big ranges, 2 small ranges. So let's see what happens this week. I'm thinking we should probably have something towards 200 pips or better. I could be wrong, but that's just a hunch. Let's see, high minus previous high. Right now we're 1 pip below it, and we're way above the previous low. High minus the close is only 6. Close minus low 21 at the moment. As I mentioned, we're about 4.5 hours into the trading day, so we still have to wait for things to happen before the range gets into play. Now, the thing about the range is I was reading something that really had nothing to do with trading, and then I was reading something else that did have to do with trading. And start to think about the range is, in fact, let's just go back to the to this pivot chart here. If the pivot is below the high, then what's the chance that price is going to take out the high? But then again, if the pivot is above the high, what's the chance it's going to take out the high? That's something we have to run statistics on, and it's something to look at. Because we know about the wick zone, and we know how price likes to take out the pivot. So since the pivot is below yesterday's high, chances of it taking out yesterday's high, breaking out here and hitting R1, is probably slim and none. Chances are it probably needs to hit the pivot. But then again, if you look at the distance between the pivot and R1, you can then look at the ATR or average range, the average true range or just the average range, and see what that distance is and say, hey, can it do both? Of course it can, but is it within the actual parameters that we look at in these ranges here? So a lot of traders might think that's a little esoteric or a little complex or complicated, but basically we're just mapping out. So you could take your chart and put a line at the previous day's high and low, or use an indicator to do that, and then you could take another or on the same chart then plot, okay, the average range from the open, and you can see what that is from the high, average range from the open, subtract it. Then you get an area where price is most likely going to stay within. And so then you start to look at, okay, once again, if it's in the upper wick zone and the pivot point's above it, chances are it's going to probably go through it. But if it's not, chances are it's not going to go through it. So for here, you say, okay, here's a weekly pivot. Here's the daily pivot. We know price likes to take out pivots. Here's a monthly pivot down here. So it's like price probably is going to head this way, just based on the simple observations, simple calculations. And we'll just have to wait and see how it plays out. Is it going to do all this today? Maybe, maybe not. I doubt it, but it probably will come near today's pivot, and it might even come near the weekly pivot. But that's, just we'll have to wait and see what happens. Okay, where did I go here? Looking at the wall mall charts, or sweet spot goals with the wall mall line, I should say. Looks like something got a little goofy here because there we go, refresh the chart. And you can see price, it looks like it's heading south. here. That's where we got a trigger. It's like it did trigger, but price then moved back up. We've got this inside bar right here. It looks like it broke out of the upper and the lower, the high and the low of that inside bar, but not by much. So this is really not the time to trade. It's what, the Asian session on a Monday. Usually things don't heat up till the London session. I mean, if you're in here just to make a couple of pips, you go right ahead. Higher low, lower high trade. And right here, we're actually looking at the monthly chart. Normally, we're looking at this on a 5-minute chart. And you can see here, it's just kind of meandering, but it did pay off here, paid off there. If you wanted to take, if you wanted to chance it, you can just basically ride it from line to line. And that'd be worth about 4 pips, but not sure. I don't like trading during this time, but for those of you who do trade during this time, it's something to look at. And finally, just, looking at things compared to the yearly open. And you can see this month where we started, time frame, go down at a daily, and you can see once again where we're at to that yearly open. And with the yearly open, you can then say put like the range of the a monthly range. Say, okay, maybe by January it's either going to hit here or it's going to get here, probably stay within that range. And you have these targets that you can shoot for if you like to trade long term, or use them as a bias. So you just have to take, a Sunday or early Monday before you start trading and map out your trades. Know where your opportunities to enter will be, your opportunities for exit. If you're a reversal trader, if you're a breakout trader, if you're trading away from an open or towards an open, just remember that. And chances are, when you sit down at the terminal, you're going to see what the price is. Well, price is going to move away from that price. I mean, it just is. It's either going to go up or down. It's going to move away from that price. And so it might move up for a little bit, and then might move back down, might move back up. But it's, for the most part, it's going to be moving away. So you can take advantage of that knowledge. So maybe if you had started to trade here and say, you know what, it's already moved away from the open, I think it's going to continue to move, and you take the trade going to the upside. Or you might even, we can go all the way down to the 1-minute chart. And you can just look and see. You can pick any spot on the chart, and that's just where the cursor is right now. So we can say, okay, price is going to move away from 3591.8. It just is. Whether it goes up or down, don't know. And that's the whole thing about trading. We don't know. Once we put the trade on, it's all money management, risk management. And, probably this week I was reading some things over the weekend, and I'll share them with you in videos. But this one thing made me think. It's, if you've ever ridden a horse, if you fall off the horse, you let go of the reins. Because if you don't, you get dragged along, and that never ends well. So it's kind of the same thing with the bad trade. If you get hold of a trade and it's dragging you the wrong way, you need to let go. Or at least have a stop so you only get dragged so far. So, fellow traders, that's from horse trading, right? Just remember, when you're at your trading terminal, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.